course, you know that there are various subsets within all of those programs. However, today we're going to just specifically focus on those particular program sets. So I am so excited to be with you. This is week number 7 of our 90-day homebuyer challenge. And let me just give you guys a round of applause because you have been so very diligent around, you know, taking the information, doing the work, rolling up your sleeves, getting uncomfortable, and preparing yourself for home ownership. So kudos to you. We have had an amazing 6 weeks of courses. And just to kind of give you a rundown, if you're just now jumping in and following us on week 7, week 1, we talked about, are you ready to buy, and preparing your mindset for home ownership. Of course, making the transition from renting to owning or living with the parents and then owning is a transition. And so we want to make sure that mentally you are actually prepared. And so week 1 was all about that. And, you know, how do we begin to set goals, specific and measurable, accountable, SMART goals were what we actually discussed. Week 2 was about basic money management and budgeting basics. And so you were encouraged to complete a worksheet that would then assist you with, you know, what you have coming in every month and then what you actually have going out, so that you can begin to see areas where you can, as I call it, trim the fat. Week 3 was all about understanding credit. And so typically that's where we start the lending process. We take a look at credit, we assess exactly where we are, and then we begin to create a plan to either enhance or increase credit scores, help you to understand what's actually on your credit. And week 3 and week 4, we had the pleasure of being with Miss Jerry Tolliver of Fly Credit University. And I just love Jerry and what she's up to, her Project 100 initiative. If you have not taken a look at those recordings, you definitely want to go back and get all of the tidbits of information that she's actually shared with us. Week 5, we talked about getting your paperwork in order. So after we have a credit qualifying score, the next thing that we begin to do is take a look at financial documents that are needed to assess what you can actually be approved for. And that was all in week 5. Week 6, we uncovered, how do we think like an underwriter, and what are the things that the underwriter actually looks for? And so now here we are, week number 7. So we've got your credit, we've done the financial review, and now we need to figure out which loan program is going to be most applicable for you. So this session we call Welcome Home, unlocking the doors to your financial future. I always like to talk about, you know, my mission statement personally. I like to think of myself as your home loan partner. And my mission statement is really to educate, empower, and inspire you to take the actions that are necessary to begin creating multi-generational wealth through the acquisition and the maintenance of real estate. The Federal Savings Bank actually started off as Chicago Bancorp. And so if you were to come to our office now, you would not see these logos, Chicago Bancorp, but that is who we started off as. And so who am I? I am actually a vice president of the bank. You know, the title is what the title is. Basically, I am responsible for managing clients and making sure that my team internally is appropriately allocating time to help you get to that ultimate goal of new keys in your hands with the purchase of your new home. I've got over 15 years of experience in the industry, and I really do specialize in working with first-time home buyers. I typically talk about the home buying experience, avoiding credit traps, increasing credit scores, and ultimately what we're doing is we're creating wealth through real estate. And so my ultimate goal is to help you make informed decisions regarding your financial future. You know, in previous weeks, we have discussed PITI payment, and that basically is what your mortgage payment consists of. And so I thought that this would be a good slide to kind of just put up for you. Some of these factors have actually changed. Several years ago with FHA mortgage insurance, the factor was an insurance premium of 2.25. Now it's 1.75. And then the monthly factor was 0.55, and now it's 0.85. So the industry is constantly changing, and I leave this information here because it's really important that at the time that you are preparing to purchase your new home, you want to be aware of what the changes are in the industry. So today we're going to talk about loan programs. And so the first one that we're going to talk about today is FHA. So here are some basic FHA guidelines. On an FHA loan, which is typically looked at as a first-time home buyer loan, you must be occupying the property. Your intention needs to be to live in this property. You can purchase a one unit, which would be considered a single family home, a condo, or a townhome, or a co-op. You can also purchase a 2-unit building, a 3-unit building, a 4-unit building, and what a lot of individuals don't know is that you can also purchase a mixed-use property. Okay, the major key with a mixed-use property is that the majority of that property does need to be residential in square footage. So you're driving down the street, you see a commercial building, it looks like it has a store on the bottom and it has residences on the top. Typically, as long as that residential portion is 51% of the square footage of the entire building, you can use an FHA loan to purchase that property. Now, what's so cool about that is that the down payment requirement is still only 3.5%. And I've jumped a couple of bullet points ahead, but I want you to know that that is very key. You also are allowed to have up to 6% in seller contributions or seller concessions. So when you're purchasing a home, and in a different class, we're going to talk about, the cost of purchasing. What does it entail? What are the costs? What should I be expecting to bring to the table as a result of purchasing? But just know that some of your costs can be offset with a seller concession or seller contribution. Those terms are typically used interchangeably. And so customary in Cook County, Illinois is about 3% seller concession. That's customary. But you can ask on an FHA loan for up to 6% in seller concession. Again, the down payment is going to be at least 3.5% of whatever your purchase price is. So to keep the numbers simple, if you're purchasing a home that's $100,000, then your down payment is going to be $3,500. Gifts are allowed. So when we're looking at how do we come up with that 3.5%, maybe mom or dad, sister or brother want to contribute and help you purchase your first home. Well, they can give you a gift. The gift does have to be documented. And so what that means is they will need to sign a letter. We'll need to see some bank statements from whomever is giving you that gift. And we'll need to see a copy of the check or cashier's check or the transfer from their account into your account. And so we do have to document those funds. But it's a great way for, individuals in your family that actually might want to help you along the way in terms of being able to come up with that 3.5% down payment. Now, FHA has a special program called $100 Down, and that is specifically on a HUD REO. A REO is a real estate owned property. That is a property that has been foreclosed on. So let's say someone was financed for an FHA loan, the property went into foreclosure, HUD now owns that property. It is considered a HUD REO. At times, HUD will allow for your down payment to drop from 3.5% to $100 down. I mean, that's a pretty amazing type of incentive. So you can actually go from $3,500 on a $100,000 purchase to $100 down if you're specifically shopping using a HUD REO or you're purchasing a HUD REO. So that might actually be something that you want to consider. Okay, now that being said, let's talk about credit, because as I shared before, credit is typically the first step in the process. The sweet spot is going to be a 640 minimum credit score. Now, here's what I'll share with you. Can you get approved for a mortgage, a home loan, at a 580 credit score? Yes, you can. However, with that being said, there are going to be many more hoops that you're going to have to jump through inside of the underwriting process. it can be a very rigorous process if your credit score is, in fact, between 580 and 600. You're also going to have some additional restrictions as it relates to debt to income ratio, as it relates to, gifts that are allowed towards down payment. And so typically, I encourage you to work your way up to a 640 minimum credit score. And if you need help with that, please, please, please reach out to me, because we do have partners, professional partners, that will guide you along the way inside of that. Now, FHA is a great loan for individuals who have experienced some life challenges, right? And so what we know is that life is like a roller coaster. There are times where life is great, money is great, income is great, credit score is great. And then there are times when we've either A, not been educated on how to maintain and increase our credit scores, or B, we've had some financial challenges that have created certain situations that have impacted our credit. And we like to call these life circumstances or derogatory credit periods. So in the event that you file for a Chapter 7 bankruptcy or a Chapter 13 bankruptcy, if your bankruptcy has been discharged, FHA is going to require a 2-year waiting period for that. During that 2-year waiting period, after the bankruptcy has been discharged, you are going to want to begin rebuilding and establishing credit. That is the way we as the bank and the underwriter knows that you have actually recovered from whatever was happening in that particular situation or circumstance financially. So you're going to want to rebuild. So